You know that I'm live right now, just so you're not caught up. Well, I suppose you know that. That's what your DM was about.
Yeah, actually, I was watching your stream, so you're happening twice, and I need to pause your stream now so I can understand what you're saying.
Yeah, for sure, bro. Well, I figured I'd just call you. I prefer chatting on the phone versus over text. It's just you're not caught up. Well, I suppose you know that. That's what your DM was about.
Yeah, actually, I was watching your stream, so you're happening twice, and I need to pause your stream now so I can understand what you're saying.
Yeah, for sure, bro. Well, I figured I'd just call you. I prefer chatting on the phone versus over text. It's just sort of a downfall of mine.
Oh yeah, no problem.
Good
So
stuff.
what you got on your mind?
You messaged me about the threshold list for Ape T plus 20. I figured, you know what? Instead of just reading all this shit, how would you feel about walking me through whatever you wanted to talk about regarding Ape and AMC? People in chat were saying you had some interesting stuff, and why not dig into it, huh? What you put together?
Oh, yeah, sure. I was doing research on a concept called syndication. This is a theory that was floating around on Twitter. I can't remember who it was that originally, or at least the first tweet that I had seen about it. But anyway, the theory goes is that companies that have a supremely high amount of short interest, or any company that might have a significantly high number of failures to deliver, when their shares are failing to deliver in that significant amount of numbers, what can end up happening is accounts are moved into syndication, which means that it's basically placed in the control of a much larger institution. And there is a obscure rule in syndication where 90 days after repeated settlement failures, that's failures to deliver basically,
Yep.
that when it's so severe that the syndicate holder, that's the account holder that controls the account on behalf of those individuals or institutions that have been failing to deliver stock, will basically be forced to deliver those shares. It's kind of like the concept of a margin call, except with these big institutions, because they're handling so much equity that they can't reasonably be expected to make up that massive deficit at once. So it's taken out of their hands and it's given over to a syndicate.
That
Which
sounds
is a
like some Sith
collection.
Lord shit, bro. I'm not gonna lie. I feel like that's in Star Wars. The Syndicate, is that a thing in Star? I'm just fucking
Yeah,
with you.
it's a dark, dirty word that we use to like refer to crime syndicates, but it literally means just a collection of organizations. So it's literally an alliance of institutions. And these can be brokers or investment banks. Think like Goldman Sachs, Morgan Stanley, Bank of America, and all of them. So the interesting thing is that with the dividends that have happened in several stocks, the one that really caught my attention was BBIG. And the reason why this one is a big example is because Vinco Ventures issued a spin-off dividend for their spin-off company called Cryptide that became its own separate entity and started trading on the NASDAQ as TYDE.
Don't tell me that BBIG or Tide respected a T plus. There's no way.
It did, actually. So interestingly enough, if you go, it's not a T plus, actually. It's 90 days. It's 90 days, dude. Not T plus 90. It's 90 days exactly. Oh, the way the wording is in syndication is that if the account fails to meet its obligations, that the syndicate is going to force delivery of all of the missing shares that need to be settled. And that's handled automatically by the syndicate account. And it's not their money. They don't give a shit. Their job is to complete the task of settling all of those shares. So it's not T plus 90 days, but exactly 90 days from the date where the deliveries missed. And what I've noticed is that with BBIG, it happened the day that 90 days after the Tide spinoff. And that just so happens to be the day that BBIG came out of its T12 halt.
You think that's why it was halted?
I don't know. It's all speculation at this point.
It's
I don't
very
even have
coincidental
definitive
at the
proof
very
that this is
least.
what happened.
Unhalted the exact day of 90 days, man.
Yeah, that's what I find so interesting. And this is a really bizarre series of circumstances because we know that it was halted because of their court. Well, I don't know how close you've been tracking BBIG's situation.
I've been paying remote attention. Yeah, I watch
Okay.
stuff on Twitter. When you post updates, I read them, and when people bring it up in chat, we check things out. I still have that algorithm. I remember I talked to you about this not long ago. Well, I suppose it was a while ago now. I've got an algorithm that coded out short exempt stocks that have an extreme amount of short exempt volume. And there was a couple of times in the last few months that I saw BBIG made that list.
Yeah, it's been consistently popping like crazy. They come up all the time, and it's not always like going to predict perfectly that something's going to squeeze, but
Right.
it usually it gives you a heads up that volatility is going to come in because eventually those shares need to be settled by market makers.
So, in regard to Ape, you think this 90 days is going to be applicable to the threshold list?
Yes, and the reason why is because exactly T+8 after Tide was issued, and that's because the first day there's a T0 real-time settlement day because it's a new stock being issued for the first time, so settlement happens that day. Then there's T+5 days in a row that a stock needs to have excessive failures to deliver in order to be placed on the threshold list. And then you account an additional 2 days of settlement time. That gives you T+8. So T+8 Tide went on the threshold list. And then 90 days after its initial offering, the initial sale of the stock, that's when BBIG took off. There was and my theory is that what's happening is that because of the spinoff, the number of BBIG shares that may have been naked shorted immediately translate to a dividend that needs to be paid back to the lender, whoever it is that's lending out their BBIG shares, because they're still entitled to their dividend. So in this situation, if a short is naked short, then they've basically rehypothecated a BBIG share.
Right.
So if they rehypothecate 10 BBIG shares according to the dividend terms, then they also owe their lender 1 share of Tide at the time of that dividend. Now, if that happened in excessive amounts, then that immediately translates to their account being placed in syndication and needing to settle those shares if they do not do it ahead of the dividend date. So because of all those failures, my suspicion is that if there was a bunch of naked shorts in BBIG, it caused a whole bunch of failures to deliver on the day that Tide was supposed to be issued, and that forced a bunch of institutions' accounts to be placed in syndication.
So
These
really
could have been hedge funds or just big whales, anybody really.
I suppose the comparison we can make then is if the same thought process applied between AMC and Ape and it was 1-to-1, meaning longs are split 1-to-1 and shorts are split 1-to-1, do you think that the failure to delivers are actually coming from AMC's float? Is that your guess?
That's my assumption, is that because AMC, we suspect, has been so severely naked shorted and the brokers are just trying to hide it. But the one thing that they can't hide is that those who are entitled to receiving Ape shares must receive them. They have to receive them. It's part of the agreement. And it's a T+0 real-time settlement the day that they were issued. So the reason why the price moved up so quickly the first day is because they needed to scramble and offer up whatever price sellers were willing to put out in order to get those shares. But then the selling continued, and this is just my opinion, you don't have to agree with me, but I feel like people that sold Ape really just shot themselves in the foot big time. Because the more shares that were sold from Ape, the easier it became for them to accumulate the number of shares that needed to be settled
It's a
by the
liquidity
syndicate
crisis,
account.
right? It's a
It
supply
is
crisis.
a liquidity. It is a liquidity crisis because there's only it's both a liquidity and a supply crisis because there's a limited number of ape shares, and because it was T0 settlement, they couldn't rehypothecate them. There wasn't enough time, and there's no way for them to like negotiate that. It takes time to rehypothecate those shares, and it happens naturally over time because you have shorts who are selling into the market, and that buyer then lends their share to another short, who that next buyer lends to another short, and so on. And that's how the chain goes of rehypothecation. The broker allows that to happen, but it's the broker's job to limit that. But they don't because they make money so easily from it. But now it's created a monster because they rehypothecated AMC so many times. And now for every rehypothecated share of AMC, somebody is owed a share of APE. So if every AMC share was rehypothecated, just say once, then you have twice the float of AMC. That means that for every share of AMC that is supposed to exist, 2 shares of APE had to be issued, even though that's not possible in theory. It shouldn't be possible in theory. But nevertheless, they had to come up with those shares somehow.
I figured this is along the lines of what had taken place is the FTDs had to have just come from the 1-to-1 conversion, just because, well, obviously there's really no individualized options chain for APE. We can get into the freaking AMC plus APE, AMC 1, whatever the fuck, right? But threshold list within 3 days of IPO or 4 days or however many days this was, certainly suspicious to say the least. And I think a lot of this rehypothecation, man, isn't actually even to shorts. I think a lot of these are rehypothecated longs. Where you're having a share that's lent from like an institution, let's say to fulfill a retail buy order, and then your broker will, against your will, share lend if you don't have it turned off, and they'll lend that out to another guy to be long, and then maybe to a guy after that to be short, and you just have these same shares that are long and short in like 4 or 5 different spots based on what's sort of situations taking place, and I think that makes pretty good sense. So my question
makes sense if the broker is more concerned with satisfying the supply crisis because they can't find enough shares, but they don't make money if they're rehypothecating for the purpose of a long, because the broker is making money from the short by them paying their short borrowing fee. But if they're borrowing those shares, and if the broker's borrowing shares out of one account to give to another, they're not making money in that transaction. They're just hiding the numbers.
Totally. Yeah. So my question is, Houston Wade has a very similar 90-day theory, except his is T plus 90. It's not 90 days, in which he thinks there's going to essentially be a total share recall. Is your hypothesis sort of in line with Houston Wade's? Have you seen his?
I haven't seen it, but it may have been what prompted some of the research that I did. I got this theory from a random tweet that I received, and I just dug into it on my own after they shared the PDF on account syndication. But the Investopedia article on syndicate accounts describes pretty well what might be happening. This is all speculation here, but
of course, yeah.
If it holds true, then what we will see, AMC won't even be the first one. GME did this already when they issued their dividend. So GameStop is actually due around October 20th, 21st. That is when that 90-day deadline would be hitting. But I haven't checked all of the shorts and the FTDs on GameStop. So the one thing that I think might be required for this to play out in this scenario is that the FTDs need to be proven to be high starting at the day that the dividend is issued, because that's one of the symptoms of this occurring, is that the failures to deliver become excessive as a direct result of the dividend. I should actually check my Ortex and see if GameStop is on the threshold list.
I suppose it's pretty easy to do. GameStop's NASDAQ, right? I don't think it's... No, it is New York Stock Exchange. I don't think it's on the threshold list. I didn't see it on the threshold list.
It is not, no.
Yeah.
So there may be enough shares floating around in the market, and maybe it doesn't apply because it was a split-end, so they just split stock. So it may
Right.
not apply in the same way. Split dividends tend to be, or I would suspect, tend to be easier, just
Right.
because the short just simply ends up short 2 shares instead of 1.
So here's a question for you. This is just hypothetical, right? We're just having conversation. What do you think the purpose then was for Adam Aaron when he issued Ape? See, I look at it as it's sort of multifaceted. It's a halfway happy between a couple parties. If we were to look at retail, I think it's sort of like, hey, we have the potential to expose if there are shares circulating around that shouldn't, since it's T0, right? Expose some shares via T0. Maybe we get some one-to-one conversion where there's a bunch of FTDs like we've had. We get some wild numbers sort of expressed, right? But then on the executive side of things, I always sort of viewed it as the opportunity for them to actually raise capital, right? It's like a halfway happy. I view it as like half price dilution, so to speak. Half price dilution. Do you think that Adam Aaron planned all this with sort of the knowledge and understanding that this was a pretty likely scenario where Ape would be on the threshold list within like 4 days of IPO, 4 days of listing?
I have to wonder if he did have his suspicions. He does. He's a really intelligent businessman. He knows what he's doing as far as running the business, and so I would think that his emphasis is on raising capital, because we should all be honest. AMC needs this money, like it really does. But I think that if he does have somebody on his staff or on his board that is aware of all the possibilities of what Wall Street could be doing to the company, targeting them through their stock, shorting them into the dirt, and so on, that he could be trying to kill 2 birds with 1 stone. And he's also satisfying retail in a way, because we did ask for a dividend of some kind. This was asked for.
Absolutely.
So I think that this is several things. I do think that there's a big emphasis on the capital raising, and I agree with his approach. I think that it's necessary that the company has to dilute some stock, because they need to get rid of this debt. They kill the debt, they kill the short thesis, they assure the company's success long into the future. Because without this debt, they would be profitable easily.
Yeah, and I don't see why shorts would stay in a company that's going to be considerably profitable consistently. I share the same thoughts.
Yeah, that's where I'm sitting at. So if Adam Aaron's priority, and it should be his priority, to get the company out of debt and to get their earnings profitable, then I agree with his approach. And we shouldn't at any point try to fool ourselves into thinking that there won't be dilution in Ape, because there will be. But what we should be asking ourselves is, are you an investor in the company, or are you just here to get rich as quickly as possible? And you're just buying a lottery ticket. Because if you're in the latter group, I'm sorry, you'll probably be very disappointed, because you probably have a schedule in your head of when you want to be a millionaire. Whereas an investor is a patient and has a very well thought out thesis for why they are investing in the company. And an investor is not only patient, but they're determined. So for me, I'm an investor, and I am literally handing my money to Adam Aaron in this way to say, please take my money and do something with it, and make my $10, my $100, my $1,000, and double, triple, or quadruple it for me. In good faith, I am handing you my money to make me more money. Do good things with this. That is the purpose of Ape. And if you're not that kind of an investor, then this probably isn't the play to be just throwing money at.
I got you, man. I got you. I mean, at this point too, right? Things have changed, and this is a situation where stuff can get difficult to have conversation about. When immediately everybody sort of got into things in January, right? A situation was different, from then to a month after that, to 2 months to 6 months to a year. And I think that time is risk, right? Anytime we're in the stock market, time equals risk, because unforeseeable, uncontrollable circumstances can take place within time, right? And as time passes, especially in a squeeze play like we're in right now, we have to think abstractly about fundamental value. And fundamental value, I think, with every passing month becomes a more and more realistic thing that we must pay attention to, you know? And that's frustrating, you know? I can understand retail's frustration with that because you know, narratives have changed and things do change, and change sucks dick, you know. Chat, drop ones if this makes sense, sounds right. It can be frustrating, and that's why I sort of wanted to bring that up and get your take on it. One more question, if you don't mind. Do you know what the AMC/Ape 90-day date is?
That would be November 21st.
Oh my God, that's crazy. I'm pretty sure that lines up exactly square on the nuts with Houston Wade's number. I think it does.
It lines up with the options expiration as well. November 21st is the option, or it's a monthly expiration date.
Interesting. Okay.
Yeah.
Well, dang, man, it's kind of interesting. Now we got two guys. I think your thesis is a little bit different than Houston's. I think he based his off of overstock to some extent. He said, hey, history typically repeats itself. Here's a pretty similar situation what we have with overstock back in the day. And it's funny because we were reading up on this a little bit before we hopped on the Discord call here. But it's kind of funny how you came to really the same conclusion based on a different thought process. That's kind of funny how that works.
Yeah. If he's basing it off of T plus 90, then I'm not sure how we arrived at the same number. I literally just went, I read the PDF. I read the docs on syndicate accounts, and then closure of the account. If failure for settlement continues, then it must close by 90 days. And I just took a date range on my trading view and drew 90 days. I'm like, oh, there it is. There's the date. And that's all I did. So now, I don't know if that translates to AMC or Ape or both going together, or even if there will be anything, but it's interesting. So
we both know that people hate dates, right? This doesn't come as a surprise. So how can we can you sort of elaborate on the significance of this without a date and without a T plus or a 90-day or this or that? Just give like a thesis on what you think is going to happen without a date.
Well, without a date, there is we say that we have this one situation where there's a marked supply crisis going on with a particular stock, and the failure for settlement is mandated to be resolved. And this is going to be placed in the hands of a trustworthy institution. I use air quotes around the word trustworthy.
Yeah.
But control of the violators has been seized. They no longer are in control of their own account. That is the theory behind this. So if the control over this situation has been handed over to another institution or a syndicate of institutions, then we might theorize that after so long, without naming dates, that there is a deadline for them to settle all of those shares and force the delivery to happen at whatever cost is necessary. And there are many roads that lead to Rome, but knowing Wall Street, they're going to try to buy things as cheaply as possible and sell them as expensive as they possibly can. So if they are going to be forced to buy absolutely every share that they need in order to settle this situation, they're probably going to do it at a time where the price has been beaten down to the lowest level that they can get it before they scoop up as many shares as they possibly can. But at some point, there won't be enough. And that is the point where they have to start placing market orders that say, whatever you want, we'll take it. And that is what this theory is saying, that after that deadline is when a market order is placed for whatever the remaining deficit is. So whatever that might be is how many shares are going to have to be bought between open and close of that day.
You know, it's kind of funny, man. I think me and Rico had a talk not that long ago about how much more realistic this looks compared to Volkswagen than it did in previous times. And obviously, I'm not speaking on the investor core because Volkswagen was a completely different situation in terms of short interest, in terms of investors, in terms of who got squeezed, in terms of how it squeezed. But he had a theory that AMC, or maybe I'm misspeaking a bit, his friend Rob in his Discord had a theory that AMC and Ape are going to kind of squeeze like Volkswagen, where they drive price down as low as they possibly can to then cover an obscene amount of failure to delivers and short exempt shares and naked shorted shares and legitimate short interest and all this stuff, and then just catch up at the very lowest possible point. Does that seem like something in the realm of possibility for you? What do you sort of view this as? I've always taken the stance of I think this will be cyclic. We'll watch cyclic squeezes such as we do with Tesla, and I would stay in that lane until AMC is cash flow positive consistently, which I think would require debt being paid off. In that situation, I think a legitimate MOAS is very likely. But until then, I'd stay in that camp. But where do you fall? You know, where would you fall, and what's your reasoning?
Well, I don't subscribe to the Volkswagen theory for the simple reason that it's a different kind of squeeze. Volkswagen was entirely because Porsche was trying to acquire Volkswagen, and they caught everybody by surprise. And then by the time they did it so sneaky with options, they just bought all the in-the-money options that they possibly could until they had control of basically 95% of the outstanding stock. And all they had to do was exercise on Friday. And when they did, they announced it on Saturday after that, and there was no chance for shorts to do anything about it. So it caught everybody by surprise. And nobody would have guessed that the initial run in Volkswagen was because Porsche was buying up a bunch of shares with the intention to reacquire Volkswagen. AMC, I could only see that same exact situation playing out if AMC had a prospective buyer that was trying to acquire the company. Could happen, but as far as I can see, that's not in the cards.
Yeah, different institution breakdown for sure.
Right. But I do subscribe to the theory that in just Wall Street are very methodical creatures. They're creatures of habit. They're going to try to do anything that they can in order to drive price down as low as they possibly can before they buy up the shares from everybody else. So at some point, expect a shakeout right at about the time where you feel so depressed you just want to give up and throw everything away. That's exactly when they're going to take it in the other direction. It's how they work. Wall Street and their algorithms are very, very well designed to make people extremely depressed and manipulate them psychologically.
You're speaking my language, man. This is composite man shit. You're getting into my my tinfoil hat stuff, bro. I'm a big buyer of I'm a big believer in composite man. I think back. Do you remember this? Do you remember when you remember the handle Blue Ice on Twitter? Want to lose friends?
Oh no, I never paid attention to Lou.
Sure.
I'll just say it. I honestly can't stand the guy.
That's chill, bro. And I'm not here to debate Lou whatsoever. I'm just going to talk about a fact. Something that took place is Blue Ice came out when we were at $9 or $10. I think it was back in May or March. It was literally the low. It was back May 12th of this year. He came out at $9, $10 and said, this play's dead. We're done. And immediately after that, the next day, we had a 40% rip up to like 835 off the low. Well, this is obviously price adjusted. You get my point, but a massive rip off that low. And that was at basically peak retail fear at the time, right? And I don't think that's on accident. I think a lot of the way, especially with AMC, GameStop, BBIG, Ader, Mullen, all of these retail stocks, right? I think you're spot on the money when you say it's completely by design that they rip these things when people are at their absolute most ridiculously peak fear, And I don't know if we're there. I feel like I don't know what else could happen. I've looked at Bed Bath & Beyond for the last week and said peak fear, and then the guy the chief financial officer dies. So maybe not yet, but you get my point. I think we're nearing sort of that peak fear phase in which everyone thinks we're a dead cat. And in reality, she's about ready to get ready with her fifth life, sixth life.
Yeah. Well, I could agree with you. I mean, I've just been looking at the VIX chopping for the last several months,
Dude,
and
yeah.
I can see the fear is building. So now I'm just kind of waiting to see how that translates to AMC if the negative beta theory holds water.
Let's hope, man. Well, we'll find out, eh?
Yeah, I guess we will. Well, in the meanwhile, I'm gonna be holding everything that I have. It's not worth it for me to sell now. So why would I ever think about that? I'll just keep on buying.
Fair enough, man. Well, shit. I appreciate you sharing your theory. I'm sorry if I ate up too much of your time. I know you're on your own Discord. You do your own thing.
No, it's okay. I'm actually at work. Well, I mean,
Oh.
I work from home, but yeah, your call caught me by surprise. I was just listening to you in the background. I'm like, wait a minute, did he just say my name? And then Discord started ringing. I'm like, oh shit.
Yeah, no, I'm back on my market open to market close live stream